afternoon and welcome to BizTech's special year-end edition of Asian Midday Market Watch. I'm Brian Fernandez and with me is my co-host Jeffery Halley, and our guest today is Lee Kian Soon, CEO of Astral Asset Management. He comes to us out of Singapore. Kian Soon, before we start, first of all, I'd like to thank you for your contribution throughout 2023 as being a regular guest on our show. We really appreciate your insights from every month.
You're most welcome. Always delighted to join the show and to exchange interesting perspectives.
Now, today we want to get your insights on look back at 2023 and what to look out for in 2024. And I'll hand this over now to Jeff.
Yeah, Kian Soon. So let's start with 2023, the year in hindsight, shall we say. And can you tell me, or perhaps quickly recap, the main themes that were important to you over the year that has been?
I think 2023 has been a year where everybody, and the markets have been glued to every Fed announcements regarding rate hikes. It's a year where interest rate hikes keep happening as the central banks was very busy battling inflations, globally. So rate hike is definitely a highlight until end of the year, and finally where there's a big sigh of relief as the central banks announce that the rates are tapering and we are looking at rate reductions in the coming year. I think the second highlight is obviously the unpleasant ones where we actually have two concurrent wars happening in the Europe as well as Middle East, and this perpetually adds pressure to energy prices, which unfortunately would cause more inflationary pressures as well.
Now, Kian Soon, then I want to ask you through your investor lens as a hedge fund person, really, what are some of the key lessons that perhaps we can take away from 2023, and also some of the key observations that you made that were perhaps different?
From the market perspective, I think 2023 has been a tale of two cities, where if you look at the developed markets, United States, Europe, they have a very spectacular recovery following, a big down in the year 2022. Meanwhile, for China, when everybody expected that, they will have a big COVID recovery, pandemic growth, it's a big disappointment in terms of market performance because the recovery really never came. And on top of that, with bad news from the real estate sector, and other regulatory measures that government put in place, the Hong Kong as well as the Chinese markets have greatly underperformed in 2023. If you ask me, right, in 2023, the most important thing is diversifications. Don't put all your eggs in one basket. If you have invested, in a diversified fashion, you're probably going to come out fine.
Now, Kian Soon, I want to continue on this theme around China. Now, you were in China earlier this month. What are some of the key observations that you've made really from a first-hand perspective that perhaps surprised you?
I think the one of the thing is the vibrancies and the level of consumptions on luxurious goods and services has toned down. People are really looking at more experiential form of consumptions. You can see the youngsters, really enjoying, domestic travel, camping, hiking, the whole lot of series of activities that allows them to, have freedom to interact with nature. Versus the once upon a time when we see there were humongous consumptions on food, liquor, luxurious handbags. I think that is one significant change. In terms of recovery from COVID, I think the airport, the point of entry to China, they have really done quite a good job in terms of that. You see about 70-80% traffic going back. And I think with the arrangements made with a lot of the European cities as well as Southeast Asian cities, more tourists will be expected in the coming year into China. And I think that would also help to boost their domestic economy.
Now, Kian Soon, last week when you were on the show, together with Jeff and me as well, there was a regulatory clampdown in China. Tell us about, obviously, this risk and how this is playing into investor sentiment.
I think investors in the previous years have been badly affected by very stringent and sudden regulatory measures. Main thing is sudden, because if you have kept the business informed of what your plans, then it's not so detrimental to business performance. But Chinese government has a hard, heated way of announcing measures and very suddenly and with immediate effect, and that could have a detrimental effects on business. We see it on the online education sector, we saw it on the tech sectors, and it's still ongoing as of last week when we talk about the gaming restrictions again. And we also see it on certain tactical sectors, strategic sectors like the rare earth industries, etc. So this, I don't think, will go away. And investors obviously struggle sometimes to cope with this. And my advice for the markets as well as investors is actually to have a diversified portfolio, just in case you have very discouraging measures on one sector, which is going to hit all the companies within that, and it's going to have a huge impact on your overall portfolios.
And if I could just jump in here for one moment and circle back to the tourism side. Now, you said that young people in China are very much going for the experiential at the moment. So, they're going out camping, they're traveling internally, etc. It's not all about blind, mindless consumption anymore. You're saying that there's going to be much higher tourism arrivals into China next year, but I think there's a lot of places around Southeast Asia that are hoping that we're going to see a resurgence in outbound Chinese tourism. So with that in mind, do you think we're going to see outbound tourism from China recover, or are they sort of clasping at straws here?
So outbound tourism has been affected because of the issues of visas, the renewal of passports for a lot of these guys who have been locked up for 3 years, and literally all their passports have expired, and that takes a long time for them to remake. And I think that is slowly being fixed, being addressed. And the recovery of flights to all these cities as well. If there are no flights between the cities, literally tourism is going to be challenging. And last but not least, I think is regards to the cost of visiting each of these cities. It's very apparent that the Chinese tourists would opt for cities or countries that has a lower cost of living, given the situation back home. So we're not talking about them spending big money these days. They're going to opt for like the Bangkok, Malaysia tour, right, which is definitely more economic. And probably some will opt to go to Japan, given the exchange rate has been extremely favorable. So outbound tourism, tourists are going to be extremely selective in terms of the packages that that you can one country can offer, as well as the value for money component.
It's interesting because we were in Bali last week, and our driver there had said, although the traffic was a nightmare in Bali, the driver himself was saying that actually tourism arrivals, the number of tourists in Bali, were actually much lower than they would normally be for this time of the year. So I think there's a lot of places around Southeast Asia that are potentially looking for China to take up the slack of perhaps US or European tourism if the economy's slow there.
Yes, I think the general observation on tourism is after 2022, there was a period of revenge tourism. Even the tourist numbers in Singapore has peaked recently, and we are also as a nation trying all kinds of measures to attract tourists to come back. But I guess for a lot of Southeast Asian cities, once the tourists come once, they're unlikely to keep returning unless there's a business or other purposes, like their relatives are here, for example. So all these tourist cities have to be extremely creative in in generating that additional demand. And I see that the revenge tourism part has probably peaked, and now is whether you could offer something value for money for them to return again.
Well, I haven't seen Singapore Airlines dropping their prices from Jakarta. It's still eye-wateringly expensive, which I guess means it's going to be another great year for Singapore Airlines. I'm not sure. Look, let's start polishing up the crystal ball, so to speak, Kian Soon, and start looking ahead to 2024. And what do you think businesses and investors, what are the key things they should be watching out for in 2024?
I think many investors are looking forward for multiple rate reductions, because this affects financing costs. regards to sectors or businesses that has to borrow lots of money. They are looking for the interest rates to be reduced significantly. But I will urge, a certain form of caution, not to be too overly optimistic. I think there will be going to be a reduction in interest rates. But as long as inflation numbers do not come down to the band, that the central banks find acceptable, they might keep interest rates a bit on the higher end, and we are unlikely to go back to the last decade of 1 to 2% interest rates environment.
Mm-hmm.
So businesses have to be careful, on that front. I think secondly is the businesses that are related to energy or fuel dependent will have to watch out for oil prices as the two wars continue, and that might have an effect directly or indirectly on fuel prices, as well as as we see recently, even shipping prices, because the whole Suez Canal has been blocked, and people are very cautious about using it, which drove up logistic prices, because insurance are unwilling to cover shipping lines using Suez Canal, or expecting high premiums to be paid if they want to use that part of the distribution chain. So 2024 going to be extremely interesting to watch, in terms of managing fuel costs, managing loan interest rates in the coming year.
Now, where do you see the opportunities? Sorry, go ahead.
I was going to say just briefly, and those event risks you're talking about with wars, etc., all of that's inflationary. It will feed into inflation and prices. So perhaps that there is a risk here in 2024 that inflation may not fall as quickly as markets are actually predicting it will.
Inflation is pretty sticky. That's the issue, because it takes a long time for them to go up. But at the same time, it's not going to be coming down to that 1-2% level overnight, and it takes months before. As we know, if any businesses raise their prices on their products, I haven't seen them lowering it down.
I think we've all found that one out.
Yeah, unless you're in Japan, right? I mean, there's only one exception I can think of. but
even that is no longer an exception.
Exactly.
Prices are, that is the economics 101 that I think we all learned in university. Prices are sticky downwards.
That's absolutely correct. And on the other hand, if interest rate starts to decline, it's also interesting for Southeast Asia and the developing markets, because it also affects the currency, because we have seen how strong the US dollar has been in the past year. And once interest rate starts to lower down to a significant effect, we could see interest coming back to emerging markets, and that would make our currency stronger. At the same time, you can think of all the related impacts on businesses that have to do exports, because right now, Southeast Asian currencies are generally cheaper. But if that changes, it could change the dynamics on the forex markets as well.
But Kian Soon, on that note, there is a lot of sentiment on the ground, especially in the manufacturing sector. Orders and forward orders are all down. Yes, I think we're all looking forward to relief in terms of currencies, particularly the rupiah, the Malaysian ringgit, which have been battered because of the spread of interest rates between these countries and the US. Do you see any risks? Are you concerned about some of our regional economies, and Singapore in particular, being the trading nation, always the canary in the coal mine? Export performance and overall trade performance has not been good in the last few months.
In fact, for Singapore, I think to your point, the economic growth this year has been much slower. Gone are the days where you have the post-COVID recovery and the surge, right? The economy this year has been more subdued because, as you mentioned, as a trading nations, you can see that the demand for semiconductors in 2023 has declined. Everybody is back to work. So, you have less demand for chips, for a lot of the semiconductors components that, unlike what we've seen in 2022. So this has caused a major decline, and we have seen that, the decline is happening more than 6 months already. And everybody is hoping that you'll reach a trough for 2024, where you could see the demand start to pick up again. This is very dependent on the overall economic situation globally, I would say. because if there's economic slowdown in United States or Europe, it's very unlikely that the trade volume will recover that quickly.
Now, final question then, do you see any opportunities that perhaps coming in 2024, sectoral or otherwise, where investors should be looking out for? I mean, beyond the hype around AI and perhaps even some recovery in tourism stocks as well. Singapore Airlines obviously continuing to price, and Jeff's pet peeve, priced significantly above market. Do you see any pockets of opportunities that investors should be looking at?
I think the pockets of opportunities investors can start looking at is, once the interest rate starts to lower, there's going to be some asset class that benefits a lot. The fixed income asset class will be a key beneficiary. Similarly, if the interest rate starts to lower, the other sector that's going to benefit a lot is in Singapore, is the Singapore REIT sector. Singapore REIT sector has been hammered badly because of the fact that interest rates keep rising, which affected the profitability and the dividend payment for a lot of these REITs, right? Because they are quite highly geared. They have to address that financing cost side, and we could see that if interest rate starts to come down to a more moderate level, sectors like the fixed income as well as the REIT, real estate investment trust sectors, will definitely be a beneficiary.
Jeff, anything else to add before we end this very interesting show?
Just one last thing, and it's something we've been touching on with all our guests this week. November next year, US presidential election.
Yes, that creates a big uncertainty, right? Given that president election is coming, and we have ex-President Trump definitely interested to join the elections, and we could see how the Democrats have created obstacles for him not to. I think the whole world is watching with sitting tight watching, because the implications of having Trump returning to the White House are huge. And we could only watch as the elections happens and as the primaries as well as the activities starts to generate momentum in the coming months. I think the whole world will be watching. I still remember in the election in the last two elections when Trump was won, a lot of us was actually sitting in a conference room, in a big conference room, watching the results as they came in the early morning from 6 a.m. and we are all having coffee around 10. And when the results was confirmed that President Trump won, I think half or two-thirds of the conference room was gone. And my phone started and actually I started to receive media invites to straight away head down to the station for a live interview on the potential implications onto the markets, and it was really exciting times. And I hate to say for 2024, I think similar moments might happen again.
I think it's not much exciting, I'm afraid. On that note, thank you very much, Kian Soon, for your insights, and thank you very much for coming on the show.
You're most welcome, and I wish everyone a happy holidays and happy New Year for 2024.
Now, we've been speaking to Lee Kian Soon, CEO of Astral Asset Management, coming to us out of Singapore. This has been the special year-end edition of BizTech's Asian Midday Market Watch. I'm Brian Fernandez.
And I'm Jeffery Halley.
And this show will be on our website, www.biztech.asia, as well as our syndication partners, TV stations, radio stations, and websites. Thanks a lot for tuning in.